Selamat siang. Senang berada di Jogja. Thank you very much for being here. I just got two surprises in the few minutes we've been here. First, our moderator who speaks Spanish. I come from Latin America, so that's my native language. And then Professor Catur, who I met recently, and just found out that we went to the same university 1 year apart. So these coincidences might probably mean something. It's very nice to be in Yogyakarta. This is the first time that I'm here and with an IMF mission, though there have been other IMF colleagues that have been here, including John, who is our ambassador here, our resident representative based in Jakarta. It's a beautiful school. I think you're very fortunate at the infrastructure you have. We've been able to talk to a number of professors, visit your library, your cafeteria. And it's a very impressive university, very large. I see you play soccer here like we do in South America. Beautiful soccer field with a stadium. So really you have a beautiful school, and I think you should be proud of it. And it's a big privilege for you to have access to this institution and to others. I understand there are people from other universities here. Basically, I'm here to talk a little bit about how the IMF staff view the world economy, Asia, Indonesia today. The IMF basically does three things. We monitor and evaluate the economy of the world, of regions like Asia, and of countries like Indonesia. That we call that surveillance. That's one of the objectives, the reason why the fund was created in 1946. We also promote knowledge exchange between countries on very specific issues, technical issues like how to set up a tax office, how to set up a system of tax laws that would maximize the authorities' objectives of growth and stability and minimal distortions. So knowledge exchange or technical assistance is another big issue that the fund does all over the world. And the third thing is lending to countries that have external problems, that have difficulties with their balance of payments or inflation or economic stability. Now, Indonesia is a very important country for the IMF. It's one of the largest in the world, both size of economy, size of population. It's the biggest player in ASEAN. And it's a country that has been doing very well economically for many years now, and has now become an important voice in the international policy debate. Twice a year, the IMF has big meetings in Washington or sometimes outside Washington, like in Bali next year, where ministers and central bank presidents or governors come to Washington to talk about what's happening and about changes to the way the international monetary rules operate. And the IMF is sort of in the middle of those rules. And in that conversation, Indonesia is a very important player, both in terms of what the IMF does, in terms of financial regulations that determine standards that different countries then apply, and many other issues. So it's very nice to be here. We spent a few days, almost 2 weeks in Jakarta with my colleagues, and now we're coming to Jakarta because as part of this evaluation of the economy, we want to talk to many people, not only government people and banks and businessmen, but also students, academics, civil society, to get an understanding, to study what is happening in Indonesia and how what's happening outside of Indonesia, in China, in Europe, and so forth, can affect the economy here. The jobs, prices, the price of the dollar, etc. the macroeconomic variables that we are following. So again, I'm trying to present to you a summary of the picture, the last picture of how the IMF staff view the global, regional, and Indonesian economy. Basically, in summary, the world economy is doing better after many years of not doing very well. In 2008, 2009, there was a very big global crisis, something that was not felt strongly in Indonesia because the economy here was doing very, very well. But it was felt very hard in the US, in the United States, in Europe, in other regions of the world, including Latin America and Africa, but with a lag. After 10 years, the economy of the world is recovering. Growth is accelerating after many years of very low growth. It's hard for, I think, some Indonesians to realize how bad this crisis was because this country was not as affected as other countries were. And Asia, in general, maintained a very strong economy. But let me just briefly note that over 20 million people lost their employment in the US and Europe. It was the worst crisis since the 1930s. It was an economic crisis. It was a financial crisis. It was something that these countries are still getting over 10 years after. We're not sure how long this recovery will last, but it's certainly good news. There's some uncertainty as to its duration. Asia continues to do well, and this presents an opportunity to undertake some reforms, including in Indonesia, that modernize the economy, that build institutions so that the government agencies can keep up with the changes in the economy, that the economy is moving very fast today. There's a lot of technological change, there's interaction with the rest of the world, and it's important for the institutions, the Ministry of Finance, the Bank of Indonesia, to carefully monitor that situation and adapt its laws, its practices, its training to that new economic reality. How do we see growth, inflation, and the external relations of Asia in the coming years? The growth outlook in Asia. Overall, the outlook for the region has improved compared to just a few months ago. The IMF publishes projections of growth twice a year. And this just happened in late October, and it was the update to what the IMF had produced in April. And compared to April, global growth is projected to be a bit higher, and in Asia, growth is projected to be 5.6% this year and 5.5% in 2018. We see growth accelerating faster than we expected 6 months ago in China, Japan, Korea, ASEAN. And in particular, China is a big player now in the world economy and in Asia. It's gotten so big, it's gotten so connected to the rest of the world that what happens in China affects everybody. In Africa, in Latin America, in Indonesia, everywhere. So China's growth projection has been revised up compared to April. But the other big country in Asia, India, has seen a slowdown in growth, and we'll talk a little bit more about that. In terms of Indonesia, we have growth projected of 5.1% this year. This is we have 5.2 here, but as a result of this mission, of this visit, and the release of data for the third quarter, which was a little bit lower than we expected, our latest projection for growth in Indonesia is 5.1 for this year and 5.3 for next year. In terms of how different regions contribute to global growth, basically Asia contributes almost 2/3 of total growth. The dynamic region, the economically dynamic region in the world is Asia, and has been for many years now. 2/3 of the growth of the world economy comes from Asia. And this is based on PPP numbers, that is GDP numbers that are adjusted for purchasing power. If we look at the contribution of global growth across the planet, like I said, Asia is almost 2/3. China is about 1/3 of global growth, 34%, just one country. India is about 14% of global growth. And here you have the distribution by region. The second strongest contributor is Europe, followed by the Western Hemisphere, which includes the US, and then the Middle East and Africa. As the world economy is recovering, accelerating growth in a pretty broad-based way, this is helping the growth of exports of Asia, both to the US and to Europe. And also Asian exports to China and Japan are also increasing. You might have read in the newspaper and in your classrooms that trade growth had decelerated quite a bit after this global financial crisis. What we see now, for a change, is an improvement and acceleration of international trade. When we try to understand what are the factors behind growth, we see that exports are important, but so is domestic demand. Domestic demand means consumption and investment, both private and public. Here we break down growth by the different components that contribute to that growth. In an accounting sense, domestic demand, government spending, consumption, investment, is the main contributor of growth. What are some of the factors behind this? You have a fiscal stimulus in China, government pushing spending to stimulate the economy, and in Japan. And this is affecting the regional outlook. As Asia accelerates growth, as some of the big countries are trying to stimulate their economy through their budget, this is contributing to lowering the current account surplus of the large Asian countries. But there's quite a bit of diversity in this picture. You have Indonesia and India, countries that have a current account deficit. That means that the balance of the trade of goods and services, like tourism, is negative. The country imports more than it exports. Now, there are other components of the balance of payments or the relationship between one country and the rest of the world. In the case of Indonesia, the overall balance of payments is in surplus. But the current account, which measures one set of economic transactions, is slightly negative and has been falling over the last few years. The other important element of a country's relationship with the rest of the world are the capital flows. What's happening with Indonesians investing in the rest of the world? Are they buying stocks? Are they buying government bonds of the United States or Europe and so forth? And what are foreigners doing in Indonesia? In terms of flows, what you've seen in Asia is supportive portfolio inflows. That means that non-residents, foreigners, are bringing money to Asia to buy financial assets like stocks and equities. And that has been supportive of economic growth. For a while, because the US central bank is very slowly increasing interest rates, there was a fear that the monetary normalization, as economists call it, of the Fed, the BI of the United States, that would lead to capital outflows from Asia and the rest of the world. That has not happened. And that's because the economic health of Asia is strong. And so because it's strong and healthy, it attracts investments from other parts of the world, including the US and Europe. When we look at inflation, it's a bit of a puzzle because growth is accelerating in many parts of the world. Normally, when that happens, inflation goes up. Yet what we're seeing now is higher growth and lower inflation. That means that central banks can adopt policies that are more supportive of growth in the context of lower inflation. And that's what happened in Indonesia last month when Bank Indonesia lowered the policy rate twice because inflation had fallen, because the rupiah was stable, and because inflationary expectations, what people think will be inflation in the future, and the BI carries out surveys to find out, inflationary expectations are well contained. People believe that inflation will remain low. Now, how strong and how durable will the acceleration of growth in Asia be? First, China. China's growth has accelerated, and when China grows, it pulls many countries with it. During the 2000 and during the last 20 years, China grew very fast, and it pulled many people, many countries along with it, because it was a commodity-intensive growth spur, which means that countries, including like Indonesia, all of a sudden found that there was a lot of demand for its exports, and prices were going up, and Indonesia became more prosperous because of this commodity boom between 2003 and 2012. Very rapid increase, and that part of that is China and China's own growth. Now, what's behind the pickup in the growth of China? Well, we look at various factors. There's external demand. The Americans, the Europeans are buying more Chinese products because their economies are recovering. So external demand for Chinese goods is up. Real estate investment in China is expanding. And the government is using fiscal policy, using the budget to try to stimulate. At the same time, China's in the middle of some very big reforms to try to change the main force behind growth. It was, and still is, public investment to the real estate and private investment to the real estate and the infrastructure sector, with the country becoming a manufacturing base for the rest of the world. China produces a lot for the world. What the Chinese government is trying to do is to rebalance growth towards consumption, to make their people better off. And rather than produce for the US or Europe, to try to produce for domestic consumption. And that's a very difficult challenge, but that is what they're trying to do. If we look at Japan, Japan's growth in the last year and a half has been quite a bit higher to what we estimate is potential growth. Potential growth is the highest growth rate that is feasible without inflation becoming a problem, without imbalances developing. And countries in the short run can grow above potential growth. But normally that's not a sustainable situation, because as countries grow faster than that ceiling, you start seeing bottlenecks. You start seeing lots of traffic in the roads. You start seeing inflation going up. You start seeing the current account deficit increasing very fast and so forth. Now, these measures of potential growth are not super precise. They're estimates. But the estimate for potential growth in Japan is not very high. It's about 0.5% of GDP, a little bit higher. For example, our estimate for potential growth in Indonesia is 5.4%, about 5.5%, which is obviously much higher than 0.5. Yet Japan has been able to maintain higher than traditional growth in the last, 6 quarters or so. So what's driving growth? Exports, external demand. That's an important consideration, and also fiscal stimulus. India's a bit of a different picture. India, as you may know, was growing very, very fast. Then it slowed down for couple of years. There was a confidence problem with private investment. Then they had a new government, Mr. Modi, and growth accelerated again. And last year, the government decided to demonetize, to change the currency. And it was a surprise act to try to fight corruption. At least that's what the government explained it as. And in the process, there were a lot of problems in substituting the old money for the new money. And that had an impact on consumption and investment and generated a slower growth than before, a growth slowdown. Now, we think that they will recover after a while, but basically that's what's behind this chart that shows lower growth in China in 2016. Very unique circumstances. Now, we are not sure how this acceleration of growth will play out and how long it will last, in part because it is affected by what economists are not calling the technology cycle. You know, when there's a new iPhone, to give you an example, there's a lot of intense production to finish the product and to get it to the market. And then there's some inventory created. So there are growth surges that are not permanent, but they come every year for 2 or 3 months or every few years, depending on the product. The technology cycle appears to be behind, combined with the recovery of the US and European economies, behind this increase in regional growth. And here we have a chart that sort of breaks the different elements of growth to justify that comment. Now, the world is growing faster. It's recovering. It's healing its wounds from the financial crisis. And our best estimate is that this will continue. But things can go wrong. What can go wrong? What are the risks that are in front of the recovery of the global economy? Capital flows and international financial conditions can change very quickly. For example, if the US increases interest rates too fast, faster than people anticipate, that could generate potential capital outflows from other countries and into the US. That would be something that could affect global growth by affecting global liquidity and interest rates. Geopolitical tensions are high. You read a lot about Korea, about Brexit, and these things can have an economic impact. China is doing very well in many ways, growth, inflation, but it also faces risk because their financial sector has grown very, very fast. And normally when this happens, it generates uncertainty and a vulnerability to the economy. So that's another risk of a sharp deceleration of growth in China, above what people expect. And finally, Asia's facing a very unique situation in terms of the speed with which societies are aging. Because the birth rate has dropped, because the life expectancy has risen, societies are becoming older on average. Some much faster than others. For example, China, Hong Kong, Thailand, Singapore, Korea. These are the countries where the percentage of the population that is working has fallen in the last few years. And the percentage of the people that are retired has increased. And that has big economic effects. Indonesia is a young country. You have many young people entering the labor market every year. We estimate about 3 million people. And the proportion of working people to retired and to other dependent populations will grow for about 10 years more. But after 10 years, the other groups will start growing faster. So the percentage of the working population will start to stabilize and then come down, which means that in 20, 30 years, Indonesia will look very different demographically to what it looks today, based on the projections of a number of institutions. Let me go into Indonesia, just say a few things of what we've learned in the last 2 weeks. Like I said, Indonesia did very, very well, in part because of the commodity boom. And by doing well, I mean the economy expanded, consumption expanded a lot of motorcycles in the streets today that were not there 15 years ago. Cell phones, education. From any angle you look, Indonesian people have done better in the last 15%, supported by a stronger economy. There are challenges, there are problems, but if you look at the movie of the last 15 years, Indonesia is clearly going in a direction of improving the living standards of its population. And here what we're saying is that even though growth has slowed down, Indonesia has achieved a soft landing. What do we mean by that? We mean that growth, which was 6.5% when the price of coal, of palm oil, of rubber, of the exports were much higher than today, that additional growth came really from outside. It wasn't so much what was happening in Indonesia that was driving that growth rate. And it was, again, highly influenced by China. All of a sudden, prices fell in late 2012, and many countries ran into very serious problems in adjusting to lower commodity prices because their tax collections were linked to it, their growth, inflation, and so forth. Indonesia did a very good job in maintaining good growth. 5% in today's world is very good. Low inflation and a stable financial situation, the exchange rate, interest rates, and so forth. This is, in our view, compared to what we have seen in other countries, quite an important achievement. So, on the one hand, the adaptation of the economy to lower commodity prices was done successfully in a socially harmonious and economically stable way. Now, when we talk to the authorities, when we talk to the Minister of Finance or the Minister of Menko or Bapenas, we hear a very common message. And that message is, IMF, you're telling us we're doing fine in relation to other countries in terms of what could have happened, in terms of our macro performance, and that's fine. But we want to do better. We want to increase the growth rate above 5% to 6.5% to 7%, because we have a young population that is coming to the labor markets, and we want to generate, not us, but the economy, good jobs that will feed into this expanding labor force. We want to grow 7%. And we think that is possible. Indonesia can grow at 7%. But it needs to do things to get there. And it won't be immediate. These things don't change overnight. They gradually change. And what does Indonesia need to do? Basically two things. One is protect the economic stability it has. And it has a notable stability, and it has a set of institutions that are very good at protecting stability, fiscal rules, inflation targeting, international standards of oversight of the financial sector. It has norms that protect the budget from getting out of control, that keep inflation low. So basically protect what you have in terms of economic stability. And second, understand what are the issues that are stopping the economy from growing even faster. And we see a few. And I think the government agrees with us because they're doing a lot in these few areas. Infrastructure is a big challenge. There's a big gap between what the economy today needs and what you see in infrastructure, ports, airports, roads, trains. Logistics are expensive in Indonesia compared to other countries. We see that there's a need to increase the tax ratio. Indonesia is a country that is very large and middle income and emerging market and member of G20, which is the club of the big guys in the world, collects very low taxes for who it is in today's world. The tax ratio is under 10%. That is very low. The IMF, as a rule of thumb, as a general advice, subject to looking at each situation, says emerging markets should tax about 15% of GDP. Here, this year, we project it to be 10%. So in our view, very low. Human capital, education, health, there's room to expand services, to improve the efficiency of public spending. In the area of regulations, there's a need to harmonize regulations across levels of government, central government, local government, and so forth. And finally, in terms of financial deepening, banks, insurance companies, Indonesia has a very, on average, looking at the whole system, safe financial sector, sound. That's very important for stability. Banks are highly capitalized, liquid, profitable. From a stability point of view, that's very good. In terms of efficiency, in terms of how much the banking and the financial sector contributes to development, to growth, things can be better. The net interest margin, the difference between what banks pay depositors and collect from loans, is very high by international standards. That is a measure of efficiency. So there are opportunities for Indonesia to grow faster by addressing these headwinds, these obstacles to higher growth. And we think that the authorities are working. You've heard a lot about infrastructure. You've heard a lot about the improvements in the ease of doing business, in starting a firm, in harmonizing regulations between ministries. There's been some progress. There's a lot of work going on these areas, and we think that this will have good results, but it will take time. It won't be overnight. In summary, that is our view of the world and outlook, Asia and Indonesia. We publish a lot of our more technical work when we present these assessments, and I wanted to just point out some of the areas where you can find additional publications. We are now finishing the 2017 Article 4, so we published last year's. We expect to go to the IMF Executive Board in early 2017, so hopefully by late January of next year, we will be able to publish, subject to the BI's permission, the 2017 Article 4. Thank you very much for your patience. Terima kasih.
Thank you again for the presentation, Mr. Breuer. Muchas gracias. Let's give once again a big round of applause for Mr. Breuer. Now, ladies and gentlemen, let's welcome our second speaker, Professor Catur Sugiyanto, who will share his view on the presentation that we just heard. So please welcome Mr. Professor Catur. Yeah, the floor is yours.
Okay. Thank you, Gunawan. It is my pleasure to sit here beside my senior, Pa Luis. I would like to share several thoughts that it's not a criticize, because it's not really polite to criticize my seniors, right? So I usually criticize my papers that come to me, but today I just expand, probably add some more little thought that might be beneficial for our discussion this afternoon. First of all, it's true that Indonesia is one of the emerging economy, together with the Argentina, Brazil, China, and also other countries. what we usually tell our colleague in abroad is that, oh, why not let us having lunch together in Indonesia? It means that we invite so many exporters, flowing their products to Indonesia, investment, and also consumer, because we have a big and growing consumer in Indonesia. So that's a general feeling that Indonesia is so beautiful in terms of, economics and also scenery, of course. But hopefully this is not a signal that there will be a flowing of, of labor coming from other countries. So that might be our challenge if that's happened to us, because we know that our unemployment rate is so high, around 10% maybe. Okay, you underline that Indonesia has an increasing manufacturing and also consumers, very high consumer confidence. And if you look at the picture, they have a, upswing of both the manufacturing PMI and also consumer confidence. That's what we learned today. But we also learned that the interest rate is very much stable and a lower level. On the one hand, this might be an incentive for investment coming to Indonesia because of the low cost of investment. But we learned also that the government investment is slowing down because of the limited budget. And we didn't learn that the private investment is growing now. So we really doubt about how and where the source of growth will be coming to Indonesia, because both the private and also the government investment will be slowing down recently. And the other is, as you mentioned, the international balance is negative to Indonesia. It means that, is it true that the flowing of international fund is negative to Indonesia? So from there, we learned that might be a very limited source of economic growth. But you still have so optimism, because next year we will have, this year we will have like 5.1, and then next year will be 5.3, I guess. So that's something that is a puzzle to me. I hope that you will, shed some light on of that issue. And as we know that next year we will have election year, both for the local government, and so in the next 2 years, that 2019 will be presidential election. What we usually have is, well, as we know that Indonesia is stable in terms of that event. And also the aggregate demand coming from these two events will be higher usually, because people spend for so many things like flyers, t-shirt, and also even people distributing money for to get the voters. So I'm kind of optimist because from this side, but from the supply side, which is coming from investment, maybe we need to have more, like you mentioned, more structural adjustment, for more reform, that people, the business will really come to Indonesia to have lunch together in Indonesia. I said. So here we have low interest rates that should be an incentive for the investment, and we have low inflation. That should be, and the negative side is that might be lesser the profit expectation for the business. But with the low inflation, I'm in doubt. I wonder if the consumer might be, slowing down or delaying the consumption. So if that happens, then the demand side will be slowing down as well. I don't want to be pessimistic of that, but I still have to challenge you. I mean, give some different thought because of this kind of development. You underline about the recent upswing in the export and as well as in the agricultural products. That's I agree with that because if we look at the palm oil sector, for example, palm oil is the largest source of the export revenue to Indonesia, and the price is increasing for the last couple of months, and our production is also high because of better in season at this time. So that might be one of the source of the growth to Indonesian economy. The other is coming from the corn production, very high corn production. Also, rice production is very high in the last 2 years actually. So maybe if I want to be optimist, then the source of growth might be coming from agriculture actually. So the production is very good, and then export is growing. So that might be bringing us to better economic growth for the next year and the next 2 years. So that's our response to this evening lecture, and I would really underline that this is very nice and very comprehensive presentation on both the global economy and also especially to Indonesian economy. That might be characterizing one of the best UIUC alumni, I guess. Thank you very much.
Thank you for the insightful feedback. Now, ladies and gentlemen, let's welcome our second speaker from UGM, Bapak Edie Purnawan, PhD. Ladies and gentlemen, please welcome Pak Edie.
Okay, thank you very much. Assalamualaikum warahmatullahi wabarakatuh. First of all, thank you very much for inviting me, although it is a short notice, 20 minutes ago. But that's okay. I would like to make something like comments on the presentation of the very prestigious IMF, leaders of mission to evaluate the Indonesian economy. And I think it's not January, it's already published in IMF website now, the article number 4, Consultation. And I already read that articles. And it says something like this. This is the IMF. Dr. Louis already mentioned in the article number 4 of the IMF Consultation. IMF projection is about, next, maybe we can compare it with us. Next. Atau saya aja ya. Okay, this one is projection is 5.1% in 2017, and 2018, according to Mr. Louis, is 5.3%. Then we are promising that we are okay. And according to our historical data, you can see that our growth is about 5.01 in the quarter 3, 2017, and beforehand it is the same, 5.01. But you know that the manufacturing growth tend to decrease compared to the previous quarter. One of the factors is about the increasing of imports from China to Indonesia. The Indonesian industry faces a great obstacle to compete with the import products import substitution. Okay, and according to Ibu Sri Mulyani, as you mentioned, she is very optimistic person. She mentioned that at the end of 2017, the economic growth of Indonesia can be 5.17%, which is very promising as well. But with the government debt of 178 trillion rupiah, which is about 2.7% of GDP, which is still, I think it is still secure because it is 3%, the standard. 2.7% is still okay. But according to some, it is 2.9%. Okay, let's see which one is going to happen, 2.7 or 2.9 of the GDP. And because of the media that's like to, make it volatile, koreng-koreng. According to the government, we are the smallest in the world on the government debt. But because of the media, then it seems that Indonesia is facing a very big, problems on the international debt. It was already mentioned by Ibu Sri Mulyani lately, which is yesterday actually in Gunawan city. Yeah. According to her, that it is still okay, and we are having the smallest, government debt in the world. But 2008, we have a budget of 2,204, which the income is only 1,878.4 trillion, with a deficit of 325 trillion rupiah. It is a bit, increasing compared to the today's year, but I think it is still okay. Since it is compulsory for the Minister of Finance to have a function of the growth, and also, according to Pak Jokowi, we are going to reduce the inequality and also the poverty. And we know that the classification of the budget, the objective is, number one is for education, as mentioned before, that's the same, which is 20% for education, and then second for infrastructure, which has a trade-off according to some, trade-off with the purchasing power of the consumer side, and the third is for the poverty reduction. And 2008, as mentioned by Pak Catur, Professor Catur, we are going to have an intention to focus on the human capital quality. It is by reducing the poverty and increasing the connection by infrastructures, and also increasing the human capability by education. I think that's very good. And we are optimistic about our economy. Okay, about the consumer sentiments, it is still above 100, which is very good to Indonesia. And also the sales of automotive and cement in Indonesia is still very good and improving. Let's say the cement now is 6,909 million tons, which is higher than before, much higher than before. And sales of the cars is increasing, as well as sales of the motorcycle is also increasing. That's why Indonesia in 2017, and I think will be also the quarter number 4, the last quarter, and 2008, because it is a political year, which is everybody is something like spending, and that's very good for the economy, and the economy will remain stronger 2018. Monetary and financial sectors, everything is okay here. And your governor got the international award, which is very good. His governor, Pak Dinar Governor, Pak Kusmanto got the, Asia and Pacific Central Banker of the Year 2017. Dan saya lihat fotonya Pak Dinar bersama dengan Pak Gubernur, agak malu-malu gini pakai ngabu rancang. Jadi mendampingi Pak Gubernur terus beliau. I think that's spectacular. We never have that such a governor of the central bank, something like that before, except Pak Burhanuddin Abdullah at that time. Pak Burhan got the same award by Global Financial, if I'm mistaken, and Pak Agus now. I think some of the governors didn't get it. The interest rate is decreasing, which is very good for the country because I think I agree with you. The monetary policy should, have an objective for the monetary stability, price stability, and exchange rate stability, but with the buffer of helping or supporting reaching the growth. I think your recommendation is something like that. I agree totally about that one. If we don't have stability in prices and exchange rate or financial stability with macroprudential policy, then we don't have any room for growing the economy, for the Minister of Finance to focus on the growth. On the other hand, the fiscal policy objective is for growth actually. But Louis mentioned in the article number 4 that it should be as a buffer as well for the stability of the economy. Then lapangan banteng and trampoline has helping each other. I think it's very good recommendation from you. Monetary policy is for stability, but supporting the economic growth. And Ministry of Finance is reaching the growth, but supporting the stability of the economy. That's actually based on the theoretical foundation of stability and control. If you want to reach the stability, then you have to hand in hand of the 4 pillars of the economy. Usually the pillars is the central bankers, Treasury Department, and then Deposit Insurance Company and Financial Service Authority. The stronger you hold hand in hand, then you are better having a stability. And by the stability, then you can create some productive economic growth. Okay, the inflation. Indonesian inflation is stable. It's very good. That's why part of the before mentioned in the Global Financial Award, it is because of Central Bank of Indonesia can handle the level of inflation. Part of that because of the internal management of the central bank, something like creating the transformation of organization. It is called what is that, Pak Dinar? It is arsitektur fungsi strategis Bank Indonesia. Oke, diterjemahkan sendiri bahasa Inggrisnya. It contains about 5 pillars. The first one is the excellent execution of the policy. The second is the motivated organization. The third is the state-of-the-art technology and outstanding implementation. And one more, I forgot it. But we can ask Pak Dinar later. And by these 5 pillars, then he divided into P's, and each of the department of the Central Bank of Indonesia is having something like objective to reach these 5 organization transformation. And most of the pillars is something like merging to the function of the central bank, which is monetary policy. Second is the payment system policy, and the third is the macroprudential policy, and reaching for the stability of prices and exchange rate. And I think that's very good. That's very good. What is that? The management of the organization of the central bank, which has an impact to the macroeconomic condition of Indonesia. And to conclude, I will not touch this one in too details. I would like to suggest the IMF to something like having focus on the future economy that would be like the digital economy. That's why Christine, the boss of the IMF, is something like talking to the media lately that we are about to see the massive disruption. What is that? It is because of the digital currency. Maybe some of you play Bitcoin or something. It cannot be avoided, and it goes very massively to many countries. Some countries abandon it, some countries is something like ban it, but in other countries is something like allowing that to the people to make a transaction. Christine says that it is time to get serious about the digital currency. She thinks that we are about to see a massive disruption. She told CNBC lately that the development of this financial technology, IMF should not or didn't rule out because it will influence the economy for sure. That's a fact, and we cannot avoid it. And to some point, she mentioned that IMF will develop its own cryptocurrency. That's set by the boss, the managing director of IMF. Lagarde didn't rule out the digital currency, and that the IMF could at some point develop its own cryptocurrency. IMF now have a special drawing rights as a fiat money, but later on I think the expert and IMF should think and discuss very massively, very intensively about what should be like to the cryptocurrency itself. Second, I think the one which is forgotten in the consultation article consultation number 4 is the interaction between the economy. It is a network that is developed very massively now. We can study the network by something like analytics, correlation, or even as simple as gradual causality or something like that. From one variable in one country to another variable in another country is something like connected each other. And there's a facility to evaluate that one by what we call it network analytics, based on the network theory. We can know the interaction between variables, which one is faster, which one is slower, which one have a very big correlation, which one is very low correlation, and the software is developed now. And some of the experts, professor from Berkeley, and also some of the central bankers, advisor from Bank of England. I met him before last week, and we discussed about how the signals will have an influence to another country, and it can be calculated by the network software. And we can know that if it is big, then we can be careful, cautious about what is the impact to Indonesian economy or to another economy if the flows is fast and big, and we can identify it. I think if Indonesia, which is small compared to United States of America or China, but later on 2050 we are number 4 in the world. We defeat Russia. Russia now is number 6, and I think Indonesia number 8 now, 2017 or 2016. By 2050, Indonesia will be number 4 in the world, the biggest 4 in the world based on the Pricewaterhouse research. I think it starts from now to know what is the flow, interaction, the network between one variable and one country, which is influencing the Indonesian economy. And most of the variable, I think, is coming from United States of America and China. From the United States of America, I think it's coming from the Federal Reserve, because some of the institution in Indonesia is something like listening, what is already mentioned by Professor Janet Yellen, and later it will be replaced by Powell. And that kind of what we call it signals will have an influence directly to what is conducted by the Indonesian economy, by central bank and by Minister of Finance. Then two, I suggest to the IMF. First is create some evaluation and also thorough, the analytics on what would be like of the next digital economy, which, 2-3 days ago, Jack Ma mentioned that in 24 hours transaction, he make a record of 340 something trillion rupiah transaction. Indonesian economy budget is only 2,000 trillion. Alibaba creates a transaction of 350 trillions in only one day, one single day. That's the prospect of the economy. We cannot avoid it. Christian cannot avoid it. And everything now is very technological. We are entering to the fourth level of industrial transformation. We cannot avoid it. We have to go to it and we exploit it. The economy now is changing, not to the conventional economy, but everything now is also you use a go-kart or Kocek or whatever. It is an indication that everything now is going to be technological. And if we want to learn the technology, then we learn from the young. Thank you very much. Assalamualaikum.
Thank you so much for the insightful feedback, Pak Edie. We actually now come to the question and answer session, but since we have a very limited time, we would say that we take 3 questions from all of you. Please mention your name and state to which speaker you want to address the question.
Thank you very much. My name is Tri Raharjo from MAPUGM. Before I ask, I would like to thank for wearing batik. It's our traditional clothes, especially in Yogyakarta. I have 3 questions. The first is, as you talked earlier, yes, we have resilience in 2000. As you talked earlier, we have resilience in 2006, 2008, and 2009. But 20 years ago, in 1997, we faced Asian financial crisis. My question is, are we really better prepared if let me talk about the oil price, crude oil price, or we talk about maybe speculant like George Soros, he has a lot of money. Number 2, my question is about inequality. Since 2015, we have a Gini ratio is 0.5. It's increase and it's matter. My question is, what our government should do to increase that? Number 3, our question is maybe out of the topic, but I just want to know your opinion about the IMF standard SIP, structural adjustment program. A lot of people say that it's not decrease the load of the country that you have helped, but it's my opinion just it increased to the lot of country that you have helped. Thank you very much.
Thank you. My name is Andri, and I'm from the second year of undergraduate program of management. Yes, so basically, I believe my question is the same as commoner do, because I have very low knowledge in economics in general. So my question is, first, because we know that our projection is pretty much rated good, and you say that is our projection for the next year is very good, but is it very good of efficient? Are we being efficient enough with our debt, because when we read the news from the in-depth, they say that we are having good growth, but it could be more. It could have been a lot more because we are not using our budget very efficiently. So is this true or not? Are we using our budget in efficient manner or not? And I don't know if this term is right. Are we having better return of investment from our budget? Better in past 3 years rather than from previous regime. So I believe that's my question. Are we efficient enough with our budget? Thank you.
All right, thank you very much for the opportunity. I would like to introduce myself. My name is Rusman. I come from Wakatobi, Southeast Sulawesi. Because the moderator also said that we have a very limited time, I would like to officially do the question. As we already know that some country cannot afford it to make some interaction or relationship with the other country. ASEAN, as we already know, have something like a characteristic that make this region united. So my question is, do IMF have something like strategy to make this region become stability and sustain for now and for the next years? Thank you very much.
Thank you. Very briefly, thank you for your questions. Excellent questions from very different angles. 2 quick comments on the growth drivers for next year. We expect growth to be a little bit better next year to this year because of 2 reasons. One is exports, because of the contribution of higher export prices and so forth. And 2 is investment, both private and public. And these were the drivers of growth in Q3. Obviously, we need to see if they will be sustained or not. And based on that, we will adapt our projections. But that is what we see. It's very interesting to learn that in Indonesia, elections generate economic stimulus. Perhaps it's not forever permanent, but at least to have a source of pushing the economy in a moment of selection of leaders is an interesting thing that we learned today. Is Indonesia better off than 20 years? Very much. Indonesia has come a long way in the last 20 years in many fronts. The world is discovering Indonesia like never before, and there's going to be a big meeting here in October of next year in Bali, and I think it'll be part of that process. The policy frameworks have improved a lot. The fiscal rules, inflation targeting, OJK. The country has buffers, international reserves, very good balance sheets on average, banks, corporates, flexible exchange rates, international regulation of banks. Indonesia has very experienced policymakers who've seen good times, bad times. They don't get scared when there's uncertainty. They're professional policymakers that are very famous all over the world. Indonesia is a lot stronger today than in the past. 5 years, 10 years, 15 years. So I have no doubt in saying that. But I would be very curious to hear my colleagues who live here and know this economy much better than us, than come from the other side of the planet, if they see this correctly. We are very optimistic about the future of Indonesia. It won't be a straight line. There are problems, there are challenges, but you have many things going for you. Young education, natural resources, geographic location. All the big countries want to be nice to Indonesia, China, Japan, the Americans, the Europeans. Why? Because of the size, because of the importance, because of the geographic location. And you have a stable country with a society that values stability. People don't like high inflation, don't like the price of the dollar. And businesses, investors, like stability so they can invest long term. There are challenges, but our big picture is very positive about the medium and long term. That's, I think, all I can say, except that we have listened very intensely to Professor Edie's comments on the digital economy. Obviously, that is a big issue that is happening all over the world. It's starting from a low base, but it's moving very quick. So 6 months can be a long time. And we take note of his comment. We agree completely that people in the international organizations, including the IMF, need to study this very carefully, because if not, we will be talking the previous century when reality is moving very fast.
Well, actually, we are happy that to learn that there are many factors that influence our economics, and also today you share the optimism of our economy. I just underlined several issues that might be, a caution that our government not to be so optimistic, but managing our country with more careful, because there is always some, obstacle. I mean, small little, maybe turbulence in the front of, so that if we do not manage very carefully, then we are afraid of, the turbulence will be really happening in Indonesia. And in response to the question about the government efficiency, we learned that there is a trend that our government, even our local government, manage their money very efficiently. So we are optimistic, and the growth is spread out across Indonesia, and also the distribution. So actually, we are facing a better economy, not only at the national level but also in the regional level. If we look at the local election last year, we learned that almost everywhere they are making a very stable and very smooth process of election. You know that election is one of source of turbulence in democratic countries like Indonesia, but still we still can manage that election. So we are sharing our optimistic. Then we hope that this feeling will be spread out across the world, so that people will come to Indonesia and bring more money, even to boost the economy and also to have better lands in Indonesia. Thank you.
I think the discussion is not supposed to answer the question, but I try to answer the question. It is about stability, it is about the inequality, and one more is about what is going to be prepared for the oil price increase. There's something like that, right? Okay, let me think about the mathematics. Then the long-term mean, long-term long-term average of something. Then if you divert from the mean largely, then you will be not stable. You are unstable. The higher or the larger you are diverting from the mean, then you are more volatile. The shorter or the smaller you are diverting from the mean, then you are more stable. Am I right? Then we have to keep every single variable's volatility to be reverting to the mean value. That's the point. That's the theoretical foundation. But it is very difficult actually, because it's composed of everything. Economy, politics, social concern, and everything is in charging one to another and makes the the probability of the values of the variables is diverting from the mean value, including the oil prices. Then the demand and supply of the oil prices should be should be managed carefully in the international arena, as well as the how the IMF is something like stabilize the region. I think it's about the same. The stable economy must be also the stable politics, and it has a stable social condition, and everything is in charging one another. Then it goes mainly to the mean value. If it is something like more outlier as diverting larger from the mean value, then that region will be unstable. And one of the solution for that stability of the region, I think, is the giving up our interest to another country, and something like help each other to reach the objective of the region itself. Something like one that is conducted in Asia. We have a Southeast Asian Nation Association, and we are something like gathering each other and knowing each other better, and helping each other, supporting each other better in terms of politics, economy, and everything related to the collaboration between one another. If it is coming from outside of the world, something like from Washington to the region, that should be a representative of the IMF to the economy, the regional economy, and then having something like the collaboration between the region itself, something like ASEAN to IMF or something like that. Then it will have a contribution to the stability of the region itself. The one that is conducted by Central Bank of Indonesia, they create something like a regional, authority. It contains of three. The first is in Sumatra, second is Kalimantan, and KTI. If the regional authority can handle each of the Bank Indonesia representative office, then everything can be going back or reverting back to the mean value or something like that. Then there should be a power, of course. The power is not coming only from the economy side, but also the political side, because the instability is usually coming from the outside of the economy, something like politics or real business cycle shock. Then just we hope to the court. Thank you very much.
So, this interesting discussion can go on and on, but time is running out on us. Finally, we come to the end of this event today. We would like to say thank you again very much to the speakers for the very informative and very insightful discussion, and to all of the audience for the active participation. And we hope that this event would be beneficial to everybody. So thank you for your attendance, and good afternoon. Thank you.